Welcome to Talking Technical. Always nice to speak to you guys. And I mean, what we've seen over the last couple of weeks, definitely is showing us that something is on the boil. And that's what's nice about markets. It is always interesting. It's almost like you're looking at a soapy, and every day or every week or every month when you've got a little bit of time to maybe watch it, the market, or that new soapy, let's call it the market, will always tell you something, and it will keep your mind busy. And that's what I like about the market, because you've never got a dull moment. Well, we must kick off with the overall index. And I think we must maybe just show you guys where are we. And I want to show you guys, first of all, that is the all share index, just to give you an idea what happened. And the idea here is to maybe just show you guys that the market is actually telling us that we had an ugly sell-off. And let's just maybe have a look here. And I want to show you guys here. Let's just take all these lines out first of all. And what do we see? We had a beautiful high. This is the overall index. I'm using a weekly chart just to show you how aggressive this selling was that we've seen in, let's say, the last 10, 12 weeks. Well, the market went as high as up as 60,000. Excuse me. Can you believe it? At 60,000. Then the market with this beautiful, you can almost say, gravestone doji. I definitely call that a gravestone doji because it wasn't a nice doji at all. But this gravestone doji, and some guys will say, Frans, it's a gravestone candle. Well, it doesn't matter. The big thing here is I like the shadow. That shadow told us at 60,000 something is on the boil. What happened? 1, 2, let's forget about that week. 1, 2, 3, 4, 5, 6, 7, almost 8 weeks straight down. And that just tells you that there is a lot of sellers in the market. I've said it before, and I want to say it again, that remember, this market had a beautiful rally for 10 years. And when sellers is going to come to the front, it's going to surprise us all. And this is what we've seen now. And that's why I want to go then over to the top 40 index. And I want to take your mind back. And this is a chart that I showed numerous times. In actual fact, early in this year, I said that we'll probably hit a bear market in September. Well, I was out for about 4 weeks. Well, let's say not I was out. The market or the charts were a little bit out because, after 10 years of rally, we had warning signals. We had this blowout phase last year when everybody said, wow, but the market is just going to go higher. This was actually the crucial fact because it told us that something is on the boil. But what I picked up then, I saw that the market is fighting against the resistance line, and I started to see a double top. And that was when I really know that something is going to happen. But this blowout phase was actually the level that triggered me, or not the level, the signal that triggered me to say that something is on the boil and something bigger is going to happen. Well, let's have a look at this chart. And remember, this is a monthly chart, and it's the top 40. Now, the top 40, we know we've got the top 40 shares there, but the big component here is, of course, Naspers. Now, Tencent picked up some hassles in the Hong Kong market, and suddenly it was sold off, and our market followed. But what do we see here? This is the support line all the way from 2009 that kept everybody happy, and it gave this bull market the impetus to just go higher and higher. But then we had a resistance line here that also went up, and this is what we call a beautiful rising wedge. Now, we always know that a rising wedge triggers some selling. And sometimes a rising wedge can also play out to the full. And it did. I remember this chart was at about 44,000 just a few days ago. And that is exactly the target of this to play out. Now, what happened was, look at the selling. But let's forget about the selling now, because the selling is now something of the past for now. I think what we're seeing here, if you look at this longer term chart, you will say to me, well, Frans, this is just a blip. That's nothing. We're not even worried about it. We don't need to worry about it because the trend is still up. No. This break of this support line that turned into a resistance tells you that the trend has been broken. So the trend is not up anymore. The trend is telling you that it is over and done with, unless we can get back into this. And I mean, that is at, let's call it 50,000. So this market, if it cannot get back at above 50,000, it will remain in the downtrend phase. Now let's just maybe go back a little bit, and I want to show you a weekly chart here. Let's just take out those lines, because I want to add in here, and I've showed it many a time before. I showed a normal 40-week moving average, because this is a weekly chart, and the 40-week moving average, we know everybody knows, and they love it. And what do we see here? This is the 40-week moving average, and let's take it back all the way to 2009. What happened? It started to pan out, and that was actually my first warning signal. And that was, at that point, it said to me, listen, something is going to happen, and it gave us that first warning signal. And you can remember that was around February, and that was just after I said, listen, I think we're going to hit some trouble waters in September. But what this 40-week moving average is also telling me, it's curving to the downside, and it's telling me that the momentum to the downside can remain. So guys, everybody that's watching this program, I believe, let's go back to the monthly chart. I believe that we can maybe see a nice bounce out of this massively oversold situation that we've seen on the weekly charts. We can see that the market can maybe surprise us to go up. I maybe see that it maybe can go back all the way to around this 48,600 level. But below 48,600 level, it will remain negative. And if it bounces back to 48,600, I believe that the market will probably turn around again. And remember, we touched the bear market level during the week, late last week, and we bounced off that. So everybody say, no, don't worry, we're not in a bear market anymore, we're out of it. I say, if we cannot get above 50,000 on the top 40 index, I will remain bearish on the market, and I will be very nervous to say that you must allocate new, let's call it long-term capital in the top 40. Yes, there's many shares, like your mid-cap shares is offering fantastic value, some of them. I mean, there's some stocks that's really struggling for, you can almost say for years. That's a different story. I'm talking here about the top 40 index. The top 40 index is worrying me, and I will remain negative while the top 40 is below 50,000. Well, let's kick off with some nice charts. And I mean, there was a lot of guys that asked me about some shares. And the first one I want to look at is, of course, Anglo American. Now I know after such a sell-off, there's a lot of guys, and that's why I want to bring Anglo American to the fore, and that is that some guys is keen to buy on a bounce and say, yes, we're going to buy it and it's going to give us a nice bounce. But you know, when you talk about a bounce, you're not talking about a medium to a long term. You're talking about a position where you want to rush into the market and you want to make a few rand, and you need to get out as, let's say, after 10 or 15%. It doesn't matter what you want. Well, let's have a look at Anglo American. Remember, when a market has seen maybe a 10-week or a 12-week sell-off, everybody is almost, you can say, so negative that when sentiment swing around, the market will move quickly. And this is exactly what happened with Anglo. So let's have a look at the candles. And you guys, you know I like the candles. Let's have a look at the daily chart. First of all, there was a falling wedge. Can you see that I drew in a resistance line there? And as this line remained a resistance, I was starting to look at the candles. Just have a look here. That candle there, this dragonfly doji, was the signal to say to you, I'm testing this support line and there is some buyers around. Look what happened. 2 days after that, there were some sellers around. And look at my resistance line that I drew in before, and I knew that if it breaks there above 304.53, that will be the place to buy it. Now, of course, we are waiting for a close, and the market went up. It closed that day at around 308 Rand. So you had to wait for the next day to see what happened. It came back again. Now let's just take you back. This is what you call the Dragonfly Doji. You had two negative candles here telling you it will probably go lower. Then you get this nice bullish candle. You can almost say it's a counterattack candle. Then you see a bearish engulfing, but look what happened. It closed below that line. Now, if you need to wait for a close, and this is why I want to mention this, if you want to wait for a close after a market have been selling off for 10, 12 weeks, you will not catch the bounce. Why? Because if you waited now, in the wedge, you are not allowed to buy. You will wait for it to close. What happens? The next day, it opens higher above the wedge, and it goes straight up, and it closes at around 315 Rand. So what it tells you, the easy money has been made already. So what is important? If you see a market of 10, 12 weeks down, and you are a trader and you want to play the, let's call it the bounce, you sometimes need to preempt it a little bit on the Dragonfly Doji and just nibble a little bit. Because sometimes it can go much lower, but then at least you've got a small amount of shares and you need to take a tiny stop loss if you want to. And if you haven't got a chance, then at least you can bounce from 303 to 315 and make your money almost in one go. It's a little bit contrarian, but just keep it in mind. When a market sold off for 10, 12 weeks, it's sometimes just a little bit wise to nibble when the right candles appear.